Welcome to this special webinar. Crypto arbitrage has exploded in recent years as savvy investors saw an opportunity to profit from crypto asset price differences. For example, buying Bitcoin on an offshore exchange at 2 or 3% cheaper than it's available in South Africa, and then selling it on the local exchange to lock in that profit. Many arbitrage pioneers remember the heady days of 2017 when the arbitrage gap went as high as 20% and even momentarily 30%. Those days are clearly gone, and 2 to 3% is a good running average for anyone engaging in crypto arbitrage today. It was inevitable that as more and more people jumped on board, the crypto arbitrage gap would narrow. Then came confusing statements from various regulators suggesting it was illegal to ship crypto assets abroad. So where does this leave the state of crypto arbitrage in South Africa? Is it still worthwhile? What are the risks and what kind of returns can you expect? My name is Ciaran for Moneyweb, and joining us to unpack this is Harry Scherzer, who is Future Forex CEO, and Josh Kotlowitz, who is the Chief Tech Officer at Future Forex. Welcome to both of you, Harry and Josh.
Thanks, Ciaran.
Harry, let's start with you. For those new to this space, explain what do we mean by crypto arbitrage? Let's get into crypto arbitrage 101 here, if we can, for a minute. And just to be clear, arbitrage is a pretty ancient concept, right? So you can buy oranges cheaply in Limpopo and you can ship them and sell them at a higher price to Joburg. Except with crypto, you don't have the transport and logistical issues. So maybe just go over the basics of crypto arbitrage for those listening.
Yeah, Ciaran, before I answer that question, I just want to say thanks so much for having us on. It's a real privilege to be able to speak to the audience about an investment opportunity of crypto arbitrage, which is somewhat overlooked by a lot of investors, and also to explain to people how Future Forex offer returns and very lucrative returns irrespective of market conditions. So just to tackle what exactly crypto arbitrage is, I'm going to echo a lot of what you said, Ciaran, because you're spot on. Arbitrage, simply put, is just when you identify that an asset is traded at two different prices on two different markets. So you buy on the lower trading market and sell on the higher trading market and make a somewhat low risk or risk-free profit. In the crypto arbitrage space, the process is as follows. You purchase crypto assets abroad, send it to South Africa, and sell it in South Africa at a profit. And the reason that this is possible is that, as you mentioned, crypto assets like Bitcoin trade at a sort of 2 to 5% premium in South Africa compared to abroad. So simply put, what Future Forex does is we facilitate this high yield, low risk investment opportunity to investors to allow them to effortlessly invest and share in the profits to be made.
All right, Josh, let's turn to you. My next question would be, is it still worthwhile? Now, you do have a graph, and I'd like you to share that graph if you can, which just shows what has happened to the arbitrage gap over time. And maybe while doing that, just run through some of the risks that one can encounter when doing crypto arbitrage.
Yeah, sure, Ciaran. So the sort of short answer to your question is yes, it is still very much worthwhile to invest in crypto arbitrage. Our clients recently have still been making exceptional returns, and let me just get this graph up to kind of explain why. All right, just checking that you guys can see that. Okay, great. So what this graph shows is the spread over time. So you can see we've got the spread plotted in blue, and that's measured in percentage points on the left axis. And for those of you who don't know what the spread is, it's basically the price difference between Bitcoin in South Africa versus Bitcoin abroad. So if you look at this graph and you see 3% on a certain day, then what that means is that on that day, the price of Bitcoin in South Africa was 3% higher than it was overseas. So the other thing, well, the first thing you might notice about this graph is the sort of volatility. From day to day, it's jumping all over the place. And that's one of the things Future Forex helps its clients to navigate and to basically ensure that you trade on the good days and the good time periods, and you don't trade in the poor time periods where the spread is much lower than average. And just to kind of answer your question, Ciaran, we're gonna zoom in on the more recent time period. So we can see that spreads have typically hovered between sort of 3 to 4% range, and more recently they've been hovering around 2%. But the important thing to realize here is that the third-party costs are still much lower than the spreads. And I'm just going to get, let's just zoom in here and then get up those lines. So what you can see here is the third-party costs at different levels of investment versus the spread. So we've got in orange the third-party costs if you do an investment amount of 100,000 Rand, and that's about 0.74%. And then moving downwards in a sort of flesh color, you've got the 200,000 Rand investment amount third-party costs. And lastly, at the bottom, the smallest of the three is the 400,000 Rand third-party cost investment, third-party costs for an investment amount of 400,000 Rand. And the reason why this decreases as investment amount increases is because there are certain parts of the third-party costs which are fixed, and therefore they scale really well as you up your investment amount. So with that understanding in mind, the important thing to note here is that the spread at 2% is still considerably above our third-party costs, and it's partially because we've already done everything we can to lower those third-party costs, but it's also just important to realize that that entire gap is profit to be made, and even in the worst case where the spread, where you have an investment amount of 100,000 Rand, that gap is still over 1.2%, which can be made per trade. And one other thing I'd just like to note is that when the spread does dip down into below the third-party costs, we obviously don't trade. So our clients should never make losses on these trades. Yeah, so I think I'm actually going to hand over to Harry to just go into what these percentages translate to in real Rand terms.
Yeah, thanks, Josh. And I think it is a...
Just explain what are these third-party costs. Just break that down for us.
Yeah, sure, I will do. So I think there's a common misconception in the crypto space that because conditions are slightly subdued from prior times, no profits can be made anymore. And that simply isn't the case, as shown by this graph. And one of the reasons that rumor may be spreading is because some of our competitors tend to charge a management fee or a per cycle cost as a percentage of capital when trading, whereas Future Forex do it differently, where we take a performance share, meaning that as the conditions get lower, our share becomes lower, and as conditions become more favorable, our share becomes more favorable, so that clients can trade at any under any conditions. Just, Ciaran, to touch on your question regarding the third-party costs, these are the costs of sending the money out the country using our Forex provider, where our third-party costs, before I actually go into it, I must tell you that our third-party costs are the lowest out of any provider, and we know that because we've done extensive market analysis. For example, our Forex cost, the exchange rate taken by the bank is 0.2%. That's the sort of unfavorable exchange rate you get, which is somewhat unheard of, because if you go to one of the mainstream banks, you're looking at 1% plus. So yeah, we've really managed to, because of our economies of scale, get these third-party costs very, very much down. So there's Forex costs, there's a cost of trading crypto abroad, there's a cost of receiving crypto locally, and then a very small withdrawal cost back to clients' accounts each trade. So that's a breakdown of the costs. And I just quickly want to touch on, like Josh was saying, there's a lot of profits to be made, but it can actually be shown graphically using a table. Josh, do we have that table of the amount clients can return each cycle? Here we go. So you can see here that we've looked at average spreads of 2 up to 4%. Now, obviously, 4% as an average spread is a really good year. 2% is pretty much the lowest we see. So that's a really poor year. And even in a poor year, there's some profits to be made of, even with 100,000 Rand, you'll make 800 Rand off a single trade at the lowest sort of spreads we've been seeing. But where this becomes extremely lucrative is that you can do multiple trades a year. Because it's cyclical, you can keep trading. You can do a trade pretty much every day. and get to a point where you make quite exorbitant returns. It is, however, limited by capital controls, which is a cumulative 11 million rand that can be traded over the year. So for example, 100,000 rand can be traded 110 times over the year. And we've got another table which actually shows how this translates over your entire 11 million rand allowance. Here we go. So even with per conditions of, let's say, 2%, right? You're still making 89,300 rand, or 89% of a 100,000 rand investment under per conditions. So this notion of arbitrage being dead and subdued simply isn't the case. There still is huge profits to be made. Our clients have been making huge profits in the interim, and that's down to our no management fee structure, as I mentioned earlier. You can see when spreads do rise, and this is net of all costs, net of third-party costs, net of our fee. This is what comes into the client's pocket at the end of the day. You can see, using an average spread of 4%, assuming that we have a really good year, clients can make 231% in a single calendar year. You can see how it becomes really lucrative in that it's cyclical, and you can keep using the same money over and over again to trade. Ciaran, I want to just touch on another question that you asked, which was related to the risks. And I think it's important for clients to understand the risks fully, and it is a good thing to discuss. So completely transparently, typically with an arbitrage trade, there is a Forex risk and a cryptocurrency risk, in that you send your money abroad and are exposed to dollars temporarily. You then trade into cryptocurrency and are exposed to market movements. However, Future Forex has a fully hedged system, which means that we lock in prices up front to ensure that we've eliminated both the Forex risk and the cryptocurrency risk. So that's been completely eliminated for clients, meaning that we have predictable trading profits up front from the onset, which is really exciting, and means that predictable, consistent trading happens for our clients. There is a second set of risks which all people who invest in this should know about, which is counterparty risks. So in doing crypto arbitrage trading, you are exposing your money to third parties, right? An example is Luno. When one of our third-party partners in South Africa is Luno. So when we bring the money back to South Africa, we have to use Luno's platform, and it will be in their custody temporarily until withdrawn. And as a result, there is an outside chance that Luno could go bust, but we understand that they're a very large organization, and this is incredibly unlikely. And being an actuary by trade, it's very important to me to have managed the risks effectively, these third-party risks. And I believe we've done so in never exposing clients to unnecessary third-party risks, but on top of that, using only the best and most trusted third parties to ensure that this is a negligible risk, to allow for extremely low risk, high yield returns for clients.
Okay, and just to be clear, are you arbitraging Bitcoin specifically, or are there other crypto assets that you're arbitraging?
Yeah, it's a great question, Ciaran. And we can arbitrage effectively any crypto asset. It so happens that Bitcoin often has the highest premium at any given time. However, we do use a stable coin called USDC as well to arbitrage, which is also a cryptocurrency pegged to the US dollar. And effectively, we compare spreads and pick the best spread and trade that, so that clients have an array of possibilities of what they're trading. But typically, it will be either Bitcoin or USDC, as those two have the highest spread.
Okay, and I wanted to ask this question of Josh. Josh, you had that graph up there a little bit earlier. It was an interesting graph, which was showing the arbitrage spread over time. And what we can see is that over the last year, that spread looks like it's narrowed from between 3 to 4% to about 2 to 3%. So there has been a diminution of that spread over time. The question that often gets asked is this arbitrage market going to disappear altogether? For example, when regulations are introduced in South Africa, it's not inconceivable that big institutions will see this as an opportunity and just swarm the market with money and kill this arbitrage gap. It is a supply and demand relationship. So do you see that as a possibility, Josh? This is a temporary thing?
Yeah, Ciaran, I think you're completely right. If regulations did have to come in place, which took the form of allowing institutions to throw money at the arbitrage, the gap would certainly narrow to the point where investors such as us wouldn't be able to invest in it, because the economies of scale that institutions have would just completely outclass what an individual can do. But I don't think the gap will ever completely close, because there's always a cost associated with sending the funds to this other market, like the dollar market, to bring the Bitcoin into your local one. And that's why you'll see even on the big exchanges, there's a little bit of a spread between the Euro Bitcoin and dollar Bitcoin markets. And just to touch on what the spread has been doing, it has sort of been on a slightly decreasing trend, but a lot of this is correlated to what the market is doing at large, and specifically the Rand dollar exchange rate. I do have a graph here, which maybe if there's more questions about it, I'll actually show it. But it basically shows that there's a really strong correlation between how, when the dollar strengthens, this typically decreases the spread. And this is recently what's been playing a large part in the spread being lower than average, is because the Rand has been continuously weakening, which has driven the spread down. Yeah, I hope that answers your question, Ciaran. Yeah. There is actually something else that I'd just like to say, and it just touches on the sort of limited nature of the arbitrage opportunity. So while we don't know when these regulations will come in place, if they ever will, it is sort of inevitable that eventually something in the landscape will change, which will alter significantly how the arbitrage opportunity works. And therefore, it is very limited. And I think it's quite important for people to realize that this may only be around for a few more years. So it's quite important to try and capitalize on this spectacular opportunity while it is around.
Right. I mean, I think this was a debate that was held even 3 years ago. You know, when I introduced this, the arbitrage gap at times would be 20%. It was phenomenal for the early adopters of this. But it was discussed at that time that this thing is only probably going to last another 6 months. And it's still, you know, here we are 4 years later or so, and it's still going. And I think you never quite kill off an arbitrage market, because there are always going to be inefficiencies. It can go to zero for a period of time, but then it'll just come back to life. Harry, there's a question that's just come in. And by the way, anybody listening to this who do have questions, you can post them here. We'll put them through. If we don't get to all of the questions, we will send them to Harry and Josh, and they can answer them privately afterwards. But we'll get through as many of these as we can while we're on the live webinar. The question is cryptocurrency currently regulated in South Africa? And if not, why not? Josh, were you going to answer that one?
Yeah, I'd be happy to field this one. So the short answer is no, cryptocurrency isn't regulated in South Africa. It does, however, fall into, things like crypto arbitrage are under the ambit of exchange control law. Exchange control laws are the reason it exists, but any sort of funds moving across the South African border will fall into exchange control laws. So when investing in crypto arbitrage, you do have to be mindful of these regulations. And there is also SARS regulations which factor in cryptocurrency, because of course SARS do want to try tax you on your profits there. And that is about the limit of, or the extent of, regulations around cryptos in South Africa.
A follow-on question from that: is cryptocurrency regulated in other countries? To the best of my knowledge, not very well regulated at all, other than pretty much an outright ban in China, very severe restrictions linking the banking sector with cryptocurrency exchanges in Nigeria. India is looking at some kind of crypto regulation, but I think they're all very tentative about this because they're afraid that it will drive the economy underground. Josh, do you want to comment on that?
Yeah, there is a sort of sputtering of countries around the world which have regulated cryptos, and I think your best bet in this regard is to look to the first world, because they're often the first movers in the sort of front end. There are countries like the UK and Singapore and Switzerland who have implemented quite a few regulations around cryptos to integrate it with their banking system and also just with their financial system in general. Yeah, Switzerland is a great example because, you know, they're a sort of banking nation and they obviously see the future potential of cryptos, so especially as a sort of safe haven, which is why they've made this move to regulate it.
Okay, here's a question, Harry. I'm going to put this one to you. This is from Hannes. How can we overcome the bottlenecks at SARS for FIA? That is the foreign investment allowance. Yeah, you want to handle that? There is a backlog there. Just tell us about that.
Yeah, SARS used to be, they claim that they're going to get each FIA application done within 3 to 5 days. And this did used to be the case. But recently, probably because of the multiple players in the arbitrage market, this has been slightly, it's been taking slightly longer. Our average, if I'm not mistaken, is around 10 working days when they've said it will be in 3 to 5 working days, so double. However, that is faster than any other players in the market. And the reason for that is that we partner with a tax practitioner who performs the applications free of charge for our clients and basically knows the best ways to get these escalated to the front of the queue to ensure that it takes quicker than people doing it themselves, which is quite an incredible value add we perform. Of course, there's no way to completely remove the bottleneck, but we've done everything we can to ensure that clients can get through as much of the 11 million rand as possible through partnering with a tax practitioner and his team to ensure that it all gets done very quickly and free of charge to remove the admin for clients.
All right, and for people who are not familiar with this, there are basically 2 allowances. Can you just break that down? What are those 2 allowances, and what are the documentary requirements? And the first one is R1 million a year. Just go through that, Harry, if you wouldn't mind.
Yeah, sure, Ciaran. So I did mention there was 11 million rand to be taken offshore per calendar year, but that gets broken down into R1 million single discretionary allowance and an additional 10 million rand foreign investment allowance. The R1 million single discretionary allowance is effectively a travel allowance. So anyone can use it at any time. There's no issue, no applications required. Thereafter, to access the remaining 10 million rand, you do need to submit an application to SARS. This is where our tax practitioner comes in and takes the admin off your hands. But what happens here is that you can only apply for as much as you have in liquid assets. Liquid assets are effectively your anything in cash in the bank, unit trusts, anything that's effectively liquid. So not a car, not a house, anything which can, your share portfolio can be seen as liquid. And effectively, what we would do is we'd sum up that total amount of liquid assets. Let's say it came to R1 million for a client. We'd apply for R1 million of the 10 million. We'd get it approved, trade through the R1 million for the client, and then reapply for another R1 million once that's been used up. So effectively, you'd apply 10 times over the year and use the entire 10 million rand allowance. So you don't have to have 10 million rand of liquid assets in one go, but you can only apply each time with as much as you have.
Yes, I think that's an important thing to bear in mind, because a lot of people think, well, I'm nowhere near, I don't have 10 million or 11 million rand. And you can have, 100,000 or 200,000, and you can just cycle through it, as you just mentioned. Another question, what are the tax implications of cryptocurrency? And I think this is a very broad subject. We've covered it before on Moneyweb. I think if we just narrow this down to crypto arbitrage, what are the tax implications of that? Harry, do you want to pick that up?
Yeah, sure. The tax implications of crypto arbitrage is income. It's taxed as income. So in other words, it's added to your income, and it's a marginal tax rate based on what you earn over the year. Obviously, this is often unfavorable, particularly for higher earning individuals. However, the way I see it is that if we're making money and giving almost half of it to the government, it's still more money than we would have had we not done it at all.
Right. Yes, it's self-defeating to say, well, I'm not going to sit here and make money for SARS, and at the same time, drive myself into poverty. Good point. Okay, question. A couple of questions coming in here. Let's just go through some of them. What is the minimum investment we have to invest for the platform at Future Forex? Yes, Harry or Josh, you want to take that one up?
I'll take it. So the minimum investment amount is 100,000 rand. You can visit our website. It's futureforex.co.za. There's also a get in touch button if you want to ask one of our relationship managers a question. They'll be in touch with you. Otherwise, you can register directly. Minimum is 100,000 Rand, but like Josh showed on that slide, the more you invest, the lower the third-party costs and the more you make per cycle. Now, it's important to realize that that's why we set a minimum in the first place. You know, we'd love it if we could just say to people, you want to put 5,000 Rand in, go for it. But unfortunately, the third-party costs would be too high as a percentage and would ensure that no profits can be made. For that reason, we've set the minimum at 100,000 Rand to make sure people can make strong profits.
Josh, is this a fairly painless way for people who may be new to crypto? You know, they hear about these extraordinary returns that you can make on Ethereum and Bitcoin and Solana and these coins, but they don't really understand them and they're a little bit afraid. How do you do that? Because it's not like investing on the stock exchange, which is a centralized stock exchange. Here you have multiple exchanges. You can go to Luna, you can go to Altcoin Trader, you can go to Valor, you can go overseas to Kraken and Coinbase and so on. Crypto arbitrage, as you mentioned at the beginning, is what you're trying to do is eliminate as much risk as possible. So you're not betting on the direction of, you know, Bitcoin is going to go up 10%. It could just as easily drop 10%. Is this a painless way for people to get involved in the crypto market?
Yeah, Ciaran, that's exactly it. I mean, crypto arbitrage gives investors the opportunity to tap into the exceptional returns available in the crypto market without the risk. And that risk isn't there because you're not exposed to the cryptocurrencies, well, especially with Future Forex's service. You're never exposed to Bitcoin and its volatile fluctuations. So what's fantastic about it is there's no speculation. It's capitalizing on a consistent market inefficiency. So that's why the returns are so consistent and almost definite. And yeah, I always recommend, obviously, to my friends and family, this is the way to get involved in crypto. If you have a good experience with crypto arbitrage, maybe then you can look into riskier opportunities like directly investing in cryptos. But I think crypto arbitrage is a fantastic first step. Harry, I don't know if you have anything to add to that.
Yeah, I think you've pretty much nailed it there, Josh. But like Josh said, I just want to echo the fact that this is a way to be exposed to the incredible returns in the crypto market without the associated risk of a crypto dropping 50% because a politician or a celebrity tweets something as you buy into it. You know, this is a way to lock in your prices up front, ensure you make profits, and capitalize on an inefficiency for those that don't have the risk appetite to be able to make significant losses and be okay with that.
Great. Harry, question for you from Mervyn. How does crypto arbitrage impact my ability to travel abroad? If he's using up his single discretionary allowance of 1 million Rand a year, you know, he can't travel as much, right?
Yeah, Mervyn, that's a great question. And we do track this for clients. So what we do at the onset is as a client signs up with us, we say, how much would you like to leave in your allowance to use to purchase offshore stocks, maybe to travel abroad, whatever the case is. And let's say the client says, listen, I want 200,000 Rand to sit. Then we leave 200,000 Rand in their allowance and we will never touch that. So it means that instead of having 11 million Rand to tap into, they'll have 10.8 million Rand to tap into. So you can see how it won't make a significant difference in returns because it's such a small percentage of the total allowance. But we ensure that we track allowances from the get-go to make sure that clients never suffer from being unable to travel or anything like that.
A question from Hendro. He's asking about impending regulations currently in the pipeline from SARS, which may pose a threat to Bitcoin's arbitrage spread. I don't think the regulation is necessarily going to come from SARS. It's more likely going to come from the Financial Sector Conduct Authority, which is likely to designate cryptos a financial product, but we don't really know the nature of that regulation. I think we're all a little bit in the dark on that. Harry, do you want to comment on that?
I'd actually be happy to field this one, Ciaran. So the sort of institution that's been heading up regulations in the crypto sphere is the IFWG. They're the Intergovernmental FinTech Working Group, and what they essentially are is they're a grouping of all the sort of main financial regulatory bodies in South Africa. So the Reserve Bank, SARS, the FSCA, the Financial Intelligence Center, etc. And they actually released a list of 25 recommendations earlier this year as to how crypto should be regulated in South Africa. And these recommendations touch on the entire landscape, from exchange control to taxation to financial service providers and the FSCA. And just kind of some of the key takeaways from that is, number one, Ciaran, you're right that they wanted to basically kind of consider cryptos as financial products. And what this will mean is that companies like Future Forex will need to register as crypto asset service providers, which will be regulated by the FSCA. And part of this, or maybe you could look at it as a separate item, is that crypto asset service providers, or CASPs, will need to be regulated by the FIC as well. And the FIC handles accountable institutions and checking things like anti-money laundering and counter-terrorist financing. And because of these sort of potentially imminent regulations, we've actually already implemented them prematurely so that we can just be ahead of the game in that regard. So, and we're actually quite excited by this potential of being able to be regulated as a crypto asset service provider, even though in the meantime we are registering as a financial service provider. And then the last one to just kind of touch on is the exchange control laws. And the IFWG recommends that the Reserve Bank oversees this, which isn't really a big surprise. But they also, and this one is the most important for arbitrage, just by the way, they also recommend that companies be allowed to purchase cryptos abroad and import them to South Africa. And that's the sort of key law, or the key regulation, which will really impact the arbitrage market, in that if this was enabled, companies would be able to do the arbitrage at a scale much larger than what we as individuals can do. And it would change the whole landscape. And it just ties into what I said earlier, that you know, if this does come into play, it means that the arbitrage opportunity is limited. So it is quite important to really make hay while the sun shines, and while it's still around.
Right. Question from Nico. If I invest 100,000, I need to have the equivalent in the bank, if I understand it correctly. I'm pretty sure that is the case, because you would have to purchase, you'd need the cash to be able to purchase the Forex. So that would be available cash, and this is not illiquid like shares and that kind of thing.
Yeah, no, that's correct. You'd have to deposit the 100,000 Rand into the Forex account so that the trading can begin. So it needs to be available and used by our systems to create the profits.
Harry, is this a fully automated system? In other words, do you require the client to sign a mandate? You know, in other words, the client says, I only want to activate a trade if it's 2% and better. I want a net 2% or a net 1.5%, bearing in mind what the market is able to give at the moment. But you don't have to wait every day for the client to trigger a trade, that phone call. No, you're going to handle all of this automatically, right?
Spot on, Ciaran. We've pushed to be as passive as possible, make this as effortless for clients as possible, and have been able to do so by, number one, ensuring that because of the hedged system, we can almost guarantee returns up front. We can say this is what you will return if you trade. So a client simply needs to say, listen, I only want to trade if I'm going to make 1.5% per trade, if that's what they set as their minimum target. So what we'll do is we'll wait for spreads to hit a level such that their net return after all fees comes to 1.5% or more, and then we'll trigger the trade for them. And otherwise, we just won't trade that day. As you said, there needs to be no go ahead from the client. We wanted to make this as effortless for clients as possible so they don't have to monitor. That's done by our systems, and an automatic trade is booked for them because they've signed a mandate up front, as you said, to say you can trade under these conditions effectively.
Okay, we are running out of time here. Just a couple of quick ones. Can we just... oh, here's a question from Louise. Your opinion on the specific exclusion on the latest Regulation 28 paper out for comment on the specific exclusion of crypto investments in retirement funds. Don't know if you have an opinion on that.
Yeah, I mean, Josh, do you want to?
So I mean, it does really mean that, you know, pension funds cannot invest in this particular asset class?
Well, I mean, we saw in the US that they've just launched an ETF which would allow pension funds to invest in Bitcoin as part of their asset class. So the US is kind of going the opposite way. But South Africa is kind of being patient and not committing to anything until they've seen what other nations do, is how I understand it. Josh, do you have anything to add there?
I think it's also kind of no surprise, just given where South African crypto regulations are at this point. The sort of regulatory bodies seem to be very hesitant around cryptos, and they're almost wanting to get it perfect before they do regulate it. And I think this just kind of echoes that stance of theirs, in that they don't want little bits and pieces to be regulated until they've got this kind of holistic picture in place.
Okay, we kind of ran out of time, but I'd like a sort of a 30-40 second wrap up from each of you. And Harry, I'll tell you what I'd like you to focus on. There are quite a few crypto arbitrage providers in the market. What makes Future Forex different?
Yeah, sure. Happy to run through this. So effectively, we've done a extensive competitor analysis of all the competitors in the market, and we've taken their various strengths and combined them along with our own strengths, which no competitors have, and basically positioned ourselves in the top position to facilitate an effortless and high yielding return for clients. So what we've done is we've focused on people. We're very people focused in the sense that every client gets their expert relationship manager who guides them through the process. The crypto industry in general and our competitors tend to prefer the idea of people having to do it themselves. That's just the industry norm. You have to go find the exchange. You have to go do things. We've said, hold on a second. Let's open this up to people who actually want this to be more passive, who want people to help them through it. And that's what we've done. So we monitor, we ensure that this thing is entirely passive, and do that by being completely people focused. So we believe, like I said, that we are in the top position in the market to ensure strong returns regardless of conditions in an effortless way.
And of course, it should be mentioned that you are an actuary, so you are a numbers guy.
I am a numbers guy.
On that bottom line.
Yeah, no, it's definitely helped. Being an actuary has definitely helped, not only with the trading and the algorithms and the best way to ensure that this is lucrative for clients, but also to manage our third-party risks so that our clients are never exposed to unnecessary third-party risks. Like we said, it's also helped with hedging the market risk to ensure that the risk-reward ratio is as high as possible for clients.
Right, Josh, your final comments, please.
Just a general final comment. Yeah, well, I guess I just want to thank all the listeners for coming today, and thank you to Moneyweb for hosting us. It's been really great to chat here. In terms of the crypto arbitrage opportunity, tell my friends, I tell my family, and I'm going to tell you guys, it is the best investment around, especially in the sort of very globally saturated market. This is one of the few still exceptional opportunities around, and I can't stress enough how much of a fantastic investment it is. And in terms of Future Forex's service, I obviously believe that ours is the best in the market. And if there is one place you want to get started with this or to continue with, yeah, we are the ones to come to.
Okay. Is your mom invested in this, Josh?
My mom, my gran, my dad, every one of my family members who can pull 100,000 rand together, they're very happy. Yeah, it's one of their favorite things to talk about these days. I never thought I'd see the day where my gran was calling me up when she saw something about Luno, but yeah, she is very involved.
Okay, I want to thank you both for coming on this. For those who are attending the webinar, thanks very much for tuning in. I found it fascinating. If we didn't get to all your questions, and I know we didn't, we will send them to Harry and Josh at Future Forex, and they will get in touch directly with you. You may have some more specific questions, some technical questions around tax. You can see they really know what they're talking about. And anyway, I want to thank you all very much for tuning in this morning. I think it was great. Thanks, Josh and Harry.
Ciaran, thanks so much for inviting us on. It was lovely to speak to you.
My pleasure.